Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Dibble, good to see you. Mark Corp, good to see you. The live chat that I get from YouTube and all those channels is off right now. I don't know what's going on with it. I'll have to run a diagnostic after we're done here, but I cannot get it to load. So if you're out there reaching out via YouTube, I'm sorry I can't see it, at least for today. So the question of the day is, Shane, how you doing? I'm doing great. Martin, good to see you. I'm doing fantastic. I think that what we're seeing right now, an extension of yesterday, is really the market's pricing in what this rate cut mania means, and I think that we're pushing all-time highs in the S&P 500 right now. Let's get right out to price action. This was something I posted on X earlier today. Big round number of 6,000. I think a topside target for the just the S&P 500. It's going to be up there around 6,000 now. I believe these markets are getting toppy. I said that yesterday. That doesn't mean that I'm just getting in there selling naked. I mean, you can't listen. Picking tops is one of those things that if a person does it right a few times in their life, you're going to reach every financial goal you could ever want as long as you bet enough. But calling tops of markets, calling bottoms of markets, it was a heck of a lot easier calling the bottom of the market back in COVID. It was a heck of a lot easier doing it then because we knew that we had good solid fundamentals. We knew it was an outlier event. We knew the sell-off, as crazy as it wasn't necessarily indicative of prices staying down for a prolonged period. We knew as soon as the things got back to normal, the world reopened, we knew we were going to get a bump. And really back then it was just a question of which company do I buy that won't go bankrupt? I did a podcast on Daily FX back during COVID, and that seems like a lifetime ago, but I told them, I said, listen, the S&P 500, not all the companies are going to make it. They're not all going to make it through this shutdown, but as long as you pick the ones that don't go belly up, you're going to be just fine. If you bought the index, the S&P back then on that dip of March of 2020 or April of 2020, you couldn't lose. You really couldn't lose. Buy it, hold it. You won, and you won big, and a lot of traders did that, and a lot of wealthy people have done that. And at this juncture, the question becomes, where are we at with regards to expectations for the future? There's a lot of uncertainty out there, guys. There's a lot of wars going on. There's a lot of elections going on. We're not going to talk election today. We're probably going to save that for tomorrow. But the interest rate cuts of yesterday signal that there's also some economic turbulence. There's some headwinds that say, you know what? We may be at the end of maybe that prolonged COVID-era bull run. I believe we are. But that's not to say I'm going to step up and just sell 5,700s in the S&P and go, okay, I called the top, and I'm going to go home. We can't afford to do that. Now, there's things we can do with options where we get in and we pay a premium. You know, we're buying in the money puts. We're buying out of the money puts. We're looking for big moves. That way, we're only liable the premium of the options. And we're going to talk about options trading a little bit more this fall as I sort of develop a strategy here to approach maybe picking the top while not betting your house on it. But if you're trading a futures contract or a CFD contract, or if you're short selling individual stocks, that's risky. It's all risky because as this market keeps ticking higher, it hurts us financially if we're short. We got to make sure that we stay out of that. We want good, solid trade location. I have a monthly chart in front of me right now because the trade that I'm looking at is the next 6 to 9 months. If in fact that is the case, and I got this question earlier in the private messaging, Shane, what do you think about XYZ markets? S&P 500 is one of them. I want to see some pricing exhaustion between 6,500 and 6,000. I see us hitting 6,000, no question. I'd be looking for like a monthly hammer, maybe a big rally up above here and then a sell-off and then a big monthly hammer. Then we can start talking about maybe buying some of those put options where we take a position maybe for the next 9 months and look to make a really big trade. Now, that's all investing stuff, all right? And I can't give you investment advice. They'll lock me up and throw away the key. I'm not an investment advisor. I'm a trader. I talk strategy. I talk about money management. I talk about all the different ways that we can capitalize on, capitalize on short-term price movements. For me, it's always been about long-term levels. So when I look at something like the S&P 500, this is trending all over X. It's trending worldwide right now. They go, wow, how high can the S&P 500 go? It can go. There's no limit. We could be at 10,000 this time next year. I don't know, but I will tell you this. I know we're going to 6,000, and if we get compression between 6,000 and 6,500, I'm going to start putting my thinking cap on and saying this is a pretty good top. It's a pretty good top. Will it happen? Will it develop? I don't rightly know, But I will tell you this. We're going to find out. Huge news day, huge news cycle today, and it really does. It's all predicated upon the Federal Reserve. So if you need to get in, you need to trade some currencies, be sure to get into Switch. Check out switchmarkets.com. They got all sorts of stuff for you. They got a demo account. Jump in, open it up, start trading MT4 and MT5 for free. Get the feel of the markets. I get that question every day, Shane, what should I do? I'm just starting out. I'd say, well, watch some streams, watch some videos, read some books. And then, when you're ready, when you understand what a buy and a sell is and how a market's made, get a demo account going and start trading demo. It's important that you start trading demo right away so you can see exactly what's happening with regards to the markets and what it is, what price discovery is. If you don't know that, it's really hard to trade. That being said, if you've been trading demo for 2 or 3 years and you go, wow, I make money every day on demo, you're probably largely wasting your time. You need to get in the market live and start trading it with real money and see if you can hack it with real money. Real money is a whole different ball game, guys. It's a whole different ball game. A couple weeks back, I did some real money trades for you, and we were successful in them, and that was great. Almost wanted to show you what a real money loss looks like because it's a lot better for you guys to see what the losing end of this game's like to figure it out if you really want to do it. So that's what I would say to start off today's stream. Week 38's been a banger, been an absolute banger banger week. Weekend news cycle was huge. We had the failed assassination attempt. We had bomb threats yesterday. We had people getting sick from a Trump rally. That news has hit about 20 people. Looks like they got some sort of chemical poisoning. This is a wide open news cycle. Weekend news cycles are going to be huge. I'm going to cover that tomorrow. We're going to get you prepped and ready for the weekend news cycle. Huge news. We also have the Israel-Hamas situation. We have pagers exploding. We have radios exploding. This is an incredible time to be alive and watch the news. And believe it or not, a lot of that stuff's going to affect our markets. U.S. retail sales was Tuesday. Not really much of anything. FOMC Live yesterday. Thank you, everybody that joined us. We had a lot. We had a pretty good audience in the room. We had a pretty good audience on YouTube, pretty good audience on X. So I want to thank everybody for tuning in and checking out FOMC Live. I love doing those. Those are a lot of fun. I have to bite my tongue, though. I don't want to talk over Jay and sort of make an idiot out of myself. It's not stand-up comedy time. It's time to be serious and trade. We nailed 2 trades yesterday, though, and that was pretty good. Jeanette, good to see you. Jeanette, hi, Shane. I'm in Greece. Glad to see you live. Jeanette, traveling the world. Fantastic gold trader, I'll tell you that. Gold trader from down under. So well done, Jeanette. I'm glad to see that you're getting out of the office and enjoying life a little bit. That's what it's all about. I've never been to Greece. I've only been to Europe like once, and that was only for a few days, but been all over the States, been all over the islands. So fantastic. Glad to see you join today, Jeanette. We're going to get to price action here in a second and a few trade ideas. BOE interest rate decision was the biggie for today, and that really was the market driver. We have a Great Britain pound USD trade idea that I'm going to have out yesterday, in about an hour from now. I'm going to have that out, and it's going to be pretty good. Yeah, trading on holiday. Absolutely. I don't know. I never trade on holiday just because I'm not focused. I was in Florida for a week. I didn't put one trade in, didn't even look at the markets. Watched the ocean a lot, was on the beach a lot, but didn't make it to in front of the screen. In any case, Tuesday, Wednesday, Thursday psychology. It's time to trade our plan. It's time to be aggressive. Yesterday was the biggest thing we've seen in the markets in a long time. It was a 0.5 point rate cut from the United States Federal Reserve. So what exactly did that mean? Well, essentially a dovish move. That meant it was bearish for the USD. And right now we're starting to see that really take over, that sentiment take over. Right here is a good look at your DXY, your US dollar index. What do you have as far as price action? Well, you had a doji yesterday. You had a big-time sell-off and then a rally. Then we sort of rallied to earlier today, and now we're selling off. This is really a fickle, delicate market. We're right around 100. What was yesterday's low? Just curious. 121. A lot of times, the best technical analysis is the easiest. Watch 100. Be very, very careful around 100 here. I would still be bidding 100 in the US dollar index. But in fact, if you do see some compression and a sell-off beneath 100, I would look out. I would look out below because we know that we've got that 0.5 point rate cut. We're also pricing in another rate cut for November. Maybe we'll take a look at some of those expectations in just a second. But for me, I take a good look at this stuff and I say, okay, what do I want to do? What do I want to get accomplished here? If I'm trading the US dollar, do I want to be long or short? I want to be short. I mean, right now, we know that we're getting another 0.25 point rate cut. It looks like about 60% in November. We know we already got a 0.5 point. We're going into a dovish cycle. Now, typically, rate cuts do not exist in isolation. Now, a lot of folks believed, me included, that you shouldn't have cut rates at all yesterday or just a quarter point and then waited and watched what happened. The Fed didn't do that. The Fed decided they were going to get aggressive. For those of you that were at FOMC Live, we broke that down for more than an hour yesterday. So that was what I would call an epic shift. And when we start talking about epic shifts, what does all that mean? Well, it means that areas like 100 are going to be very important. Why? Because nobody knows what the dollar is worth right now, and that's where we're going to price it. So if you go to a monthly chart, a long-term monthly chart, and we look at that 100 level, what happened back here in July of 2023, about a year ago, you remember Jay Powell talking about July of 2023 when we thought we had the disinflationary cycle in check. When we saw inflation higher and we were just going to think, now, the disinflationary cycle looked to be winding down last summer and last fall. We saw a pullback in our markets because we sort of thought we were going into a recession. That's sort of when the rate cuts narrative started kicking off. So that right there, that sell-off was down to about 99.57. I expect a test of that zone. So if we're looking at 100 here in the DXY and you're looking at 99.57, that's probably a real good bid. That's probably a real good bid if you're going to be trading down there. As far as what I would say for a macro level, spike low, spike high, pullback. You can see about 62%, the back end of our golden zone. Why is that zone important? Why would I even build a Fibonacci there? Because that's when we shifted from unlimited quantitative easing and dovish policy after COVID. Right there's your COVID craziness. Boom. And then what? Big time rally. Why? Because we knew the rate hikes were coming. We knew we were going to have to tighten up policy. That brought a tremendous amount of puff to the U.S. dollar and specifically against the majors. So right there, that's a huge zone. I would say from 100 to 99 is epic. If you want to wait and be patient with your entries, if you're going to trade this DXY CFD, something like that. What's your low right there? Your low right there is 99.57, and then right there 99.17. That would be my bid, 99.50 to 99 flat. If you get a chance down there, probably a very good bid. If in fact we break beneath 99, then we're going to be in a free fall down to about 94, and we're going to start getting in to where we were, where the dollar was before COVID. And I got to say that I think ultimately that's going to be the goal from the U.S. Federal Reserve, specifically with these rate cuts. I don't know really what the rationale is behind the rate cuts. They must know something I don't, because inflation is far from being in check. So right here, you will see the half-point rate cut. That one sort of piles in and really is the number one news story in the world right now. As far as what we can be looking at here for today, the BOE, Connor did a great job unpacking the BOE. We're going to touch on it right here and take a look at some of the pound pairs. And then after that, we're going to get on to the Japanese yen, which is really going to be my pick to click or my target for the overnight. So we'll have an official idea out for the Great Britain pound USD a bit later today. About an hour from now. In any case, the verdict is in. The BOE decided to hold rates at 5. So you got the BOE holding rates at 5. You've got the Fed cutting rates. What does all that mean? Put it in a jar and mix it up. It means that you're probably going to get a bullish Great Britain pound USD, at least from a monetary policy standpoint. A few things to point out here. The BOE decision, you can see this is a good look at the last 5 years of policy. We cut, we went flat, we rose. We've just sort of plateaued. Will not surprise me at all if the BOE holds that rate somewhere around 5% for the immediate future. So what does all this mean for the Great Britain pound US dollar? It means we're bullish. I mean, it really does mean we're bullish. Remember, half a point Fed rate cut with suggesting that, yeah, we believe we're going to be able to cut some more against a hardline 5%. BOE cut rates last month, coming back in this month saying, we're not going to cut right now. But Andrew Bailey said, I think I'm optimistic we're going to be able to cut in the future. What does all that mean? For right this second, it means that the Great Britain pound is positioned to gain back some of the puff it lost against the dollar since 2021. So if I'm trading Great Britain pound USD and you say, Shane, up or down right now? A question that I hate, I get it 5 times a day. Bullish or bearish? Buy or sell? I buy from here. I don't want to say I buy from here because I hate buying from here. I never buy at market, really anything. But do you want to be long or short? Long. Why would I say that? Because that same Fibonacci retracement sequence that we looked at for that DXY, essentially it's just inverted here for the Great Britain pound USD, but that's the key time frame. That's when we knew that the US dollar was going to have to go hawkish, and that's when we saw the big time sell-off. Big time sell-off, boom. Why would that be the case? Because the dollar's gaining puff. Since then, we really rotated back up. My next port of call will be somewhere up around 134 from here. Given that analysis, that macro analysis, what do I want to do right now? I want to buy it. I want to buy it really any way that I can. How can I do that? It's ugly. 4-hour chart. Boom, boom. retracement, boom. Now we're still on the top side of this thing. The U.S. session's been completely bullish. We probably missed our trade, but that's okay. One of the great things about Forex pairs is the ranges aren't huge, meaning you could actually buy a 38% and risk the back end of the golden zone and typically be okay. In this instance, 4-hour chart, what is that? 38 tick risk, 38 pip risk. That's nothing. You could have easily bought here and held and been okay, felt good about it. You could have waited for the golden zone, went down here around 32 and a quarter, 132 and a quarter. That would have been perfect. That would have been perfect, perfect trade location. So for right here, if I'm looking to buy this thing, what do we want to do? Do we want to buy at market? Well, I mean, I could buy from 132.83. My projection to the top side is 134. Or do I want to wait for a pullback? I'm a pullback trader. This type of market structure here suggests that we're still very bullish, but I still may get a chance to buy at 132.50. However, if I want to get in on this and I don't want to be left out, we got really no market drivers facing either one of these things going into the Friday session. We just go ahead and buy the market and see what happens. So, and there's my bell went off. Man, that bell's loud. I don't know if, no, my desktop's on, so you didn't hear that, but holy cow, that's loud. In any case, let's go ahead and buy this thing. We'll see what happens from here. We'll sort of keep you updated, but personally, a better trade location is down there at 132.50 and then also 132.15. If you got another shot at that quarter handle, I don't think that would be bad. For me, I believe that we are going up. I believe that we are going up in the Great Britain Pound USD. I just couldn't really tell you when or how. Maybe we go up right now and get paid. I don't know. We'll sort of monitor this as the stream wears on. But personally, I think that we're going way high, and that's not a scientific term. We're going way high. I think we're going very high here in the Great Britain Pound USD. All right, we do want to cover gold. Everybody loves gold. Not a party without gold. We did some live analysis yesterday with gold and hit a couple of trades that were pretty good. We had that daily 38% retracement that came into play. I absolutely loved it, and we got some great scalps there. Since then, we saw a sell-off beneath that level and then a big-time rally. So right now, I look at this rally and I say, okay, clearly 25.56 was the launch point. That's where we wanted to do business from, and you can see that we're up almost, $34 since then. That's a pretty good market call. The low right there, though, 25.46.99. Remember, we had that 24.50 level, 25.50. Man, those, as the numbers get longer, they are harder for me to say. 25.50 level. We talked about that yesterday at FOMC Live. Been pretty good. I mean, if you bought down there, you made a lot of money. If you bought right here, you made a lot of money. But right now, all that's over. What do we need to know? A couple of things. Number one, we're at all-time highs. I got this question earlier from a very experienced trader. Trader's been in the room for years, been watching the live streams for years, been reaching out periodically, hadn't heard from him in months. And the question was, what do you think about gold? What do you think about the S&P 500? I have a hard time trading these when they're at all-time highs. That was sort of the assertion from the question. How would you trade it? And I would say, well, it's hard because I just talked about how to short the S&P 500. All of CNBC's laughing at me. They're calling me a fool. They're calling me stupid. Get with the trend and get with the program, take the money and go home. I agree with that. I do. But our human nature really tries to say, okay, we're at all-time highs. What goes up must come down. I mean, that's just gravity. Throw something up in the air and it comes down. The markets are the same way. Nothing goes up forever. And just because we're in probably the rally of all rallies in gold and the rally of all rallies since COVID and equities doesn't mean that these markets cannot come down. And I sound like an idiot saying that, the Dow's up 550 points, but it's the truth. Now, do I believe in selling right now? No, I told you, things have to set up. If they don't set up, you're going to get destroyed trying to short markets that are trending. Gold is trending. As of right now, I want to be long. In my view, you probably aren't going to get the next big compression or pullback. We talked about 2,600. I had that up on the charts yesterday. What did we go to? 2,600, and then we sold off big. Okay, that's over with, but definitely keep an eye on big round numbers from here on in. If you're trading a market that's trending into all-time highs, remember, nobody's ever traded gold. Nobody's ever bought gold at $2,600 before, unless you're stupid and you're getting charged a hell of a premium. All right, then maybe. But if you haven't been trading gold ever, remember, the markets have never valued gold as 2,600. So immediately I was saying, okay, you're probably going to get a pullback from that. Did we? Yeah, we did. Okay, whatever that's worth. Do we want to short again from up there? You could. I don't have a problem with anybody shorting. I would take my entry would be up a little bit higher, 25.9750 to the short. realistically, is there anything special about 2,600? No. It's a big round number, and there were sellers there. I would say that there was probably institutional sellers there. Is there enough sellers there to keep price down? Doesn't look like it. Interest rate cuts, bullish for commodities. You've got exploding pagers and radios in Lebanon. You've got serious escalation on the way there. I don't see any way around that right in the Israel-Hamas situation. You've also got escalation, pending escalation in Ukraine, Russia, as the long-range missiles start being used in inland Russia. You've got really an ugly geopolitical scenario. You got rate cuts from the Fed. It's going to send commodities higher. There's no question about it. WTI crude oil, we're at $72 today. You think that's an accident? That's not an accident. Commodities go up. Dollar goes down, commodities go up. It's as simple as that. Why? Because it takes more of my dollars to buy commodities. Okay, so as commodities rise, what happens to the price of gold? It goes up, period. Gold's probably your number one commodity. Gold and crude oil are the number one commodities in the world. Don't forget about silver, though. We'll look at that in a second. All-time high right there. If you want to scalp in front of that, great. I personally think that I won't even consider an intermediate top. And by an intermediate top, I mean something that's going to be in range for maybe 2 months, maybe 3 months, until we hit the next quarter handle, and that's going to be 27.50. I definitely see that as doable. And then where I think that this market potentially could really top out at, and most people believe we'll hit $3,000 gold. I think that's very possible. The range between 27.50 and 3,000, I expect a lot of business to be done there. I don't think we hit 3,000 this year, but it's possible. Probably 3,000 in Q1. Depends on the rate cuts, but if there's more rate cuts coming, you can bet gold's going higher. So as far as, okay, that's all great. That's a macro sense. Okay, Shane, I got to trade right now. I got a car payment due. I got to make my rent. I'd say, okay, well, here's really what I would be looking at. There's your 4-hour chart. What am I going to say? Those of you that have been with me for a while pretty much know. That's our range. That candle, that 4-hour candle right there is the one we're looking for. Why? Because that's when the Fed rate cuts happen. You can see the volatility, tremendous amount of volume. We don't have volume on this because it's a spot market. But something like this is going to be very important. Keep an eye on that range. All-time high, we can sell right up in front of there. Just make sure your stop loss is right on the other side of 26, maybe 26.0275, something like that. I'd be probably looking to sell 25.97, somewhere in there, 29.9750. Pullbacks here, our pullback buys are already over. So the next time I would be looking pretty much to buy this thing is one of two things. Number one, if we do get an intraday sell-off or maybe a late week sell-off, I'm buying right from the bottom of that Fed range. No questions asked. That's also our long-term 38% or our daily 38% retracement. Low down there is right around, 25.50. That's a bid. That's an automatic bid for me. Now, if you could say, well, do you want to work a Fibonacci in there? I wouldn't do it. I would wait for 2,600 to go. I mean, we've gone over these game plans a lot because gold's been trending. We're going to wait for that break, and then we're going to buy in on those pullbacks. Yesterday, we had a couple pretty good trades in gold. We finally got our pullback to the daily 38% after the Fed announcements. We crushed that trade. We crushed it. There's no question about it. So that's how I'd be looking to trade this short term. I think that's a pretty good game plan. If you wanted to get sort of, do Fibonacci like this, you could do it. I wouldn't do it. In my view, the number one thing in this short-term gold market you need to be watching is that 4-hour candle right there, and that was your Fed meeting candle. So something to think about there. All right, guys, let's see. I'm getting some private messages coming in. I'll be sure to answer those right after the stream. Let me go ahead and see if our live chat functionality is on in YouTube and in Facebook and all these X and all these places. It's not. So there's something wrong with that. Like I said, I'll go ahead and take a look at that for tomorrow. But just the bottom line is technology. There's something always going on, and there's something always going on with this stuff. So that's all I can say about it. That's the game plan for gold. All right, bigger fish to fry, though. Believe it or not, there's bigger fish to fry than the gold market here. Well, what can we really say? It's going to be all about the BOJ. Bottom line, late week trade is going to be about the Japanese yen. It's going to be about the BOJ. What do we have? What do we have this week? Fed rate cuts. Epic, historic rate cuts. Write it in your journal, rate cuts. Remember that. Remember what you saw yesterday. Remember what you see today. Don't ever forget that. It's absolutely imperative that we understand what moves markets and what fundamentally changes markets. Yesterday, the game fundamentally changed. The Fed basically said, we're more worried about economic growth and jobs than we are about inflation. We're cutting the rates, and we're going to judge it by its works. whatever the hell that means. Holy cow. I couldn't believe that Jay Powell said that. We're going to judge it by its works. That means if I do push-ups every day, I'm going to judge it to see if I get any growth. That's ridiculous. That's ridiculous. He's got to know before they do this stuff. That's the idea, right? Well, what does the BOJ know? The BOJ knows there's been big problems. The carry trade is pretty much dissolved, and that's basically when you bet against the yen. Okay, that's great. What do we think that what the BOJ is going to do? A little bit of historical context here. The BOJ has always loved to maintain a negative deposit rate. The reason why they love to keep the yen, by they, I mean the Japanese government and the BOJ, they love to keep the yen devalued. The reason why is it makes the export sector, which is a huge, epic part of Japan's economy, it keeps that export sector hyper-competitive. If you do have a devalued currency, when you take your goods to the international markets, goods and services to the international markets, you can blow the competition away. So if you blow the competition away with a weaker yen, the idea is you bring that foreign investiture into your country because you're going to outperform everybody. That's the idea. That's why when we start to see, and the tremendous amount of outstanding debt the government's holding, or the BOJ is also holding, as interest rates go up, those debtors can really get into trouble. BOJ interest rate decision, there's an incredible impetus for the BOJ to start cutting interest rates. They want to start cutting fast. They can't, though. They're sort of in a catch-22. Think of the BOJ policy decisions as being inverse to the Western countries. Remember, they ran a negative deposit rate. The other countries were raising interest rates. The BOJ was holding them negative during that post-COVID era. That's very important to understand that because a lot of folks just look at the BOJ and they say, okay, they're going to cut rates like everybody else. They want to. Believe me, there's a lot there's a lot there, but I don't think that they can just yet. And there's a lot of reasons for that. But in any case, we're expecting rates to stay the same during the overnight. It's supposed to come in somewhere about 0.25%. Now, it's hard to really understand what exactly the BOJ is thinking unless you look at its history. And right here, you can see BOJ raised its key short-term interest rate at July 2024 meeting from the prior range of 0.17 in March. It will reduce monthly bond buying to $3 trillion. If you read all that stuff, it was really the first successive interest rate hikes that they've had in years and years and years. And you can see right here by this chart, this shows you everything you need to know. This is a 10-year chart. Boom, look at this. You were sort of at zero going into 2016, cut to a negative rate, and we stayed there until when? We stayed there late. We were already negative. The Bank of Japan went through the entire COVID pandemic without moving interest rates. That's unique. Everybody else panicked and dropped them to nothing and even negative. So we were already negative here, the BOJ was, and they just held them. And now they had to do successive rate hikes. I'm going to have to work on my English. Boy, I tell you what, my language skills are not good. I got to work on that. In any case, right there, long-term, negative. Now we're positive. Take a look at, I had one other chart in here that I wanted to go over. No, that's about it. So what are we saying here? We're saying that we're going to hold them, which is interesting because you think that you would definitely want to cut, and with the rest of the world cutting, why wouldn't the BOJ cut? The answer is that they can't. They just can't. So we'll see exactly what happens here. I think that it's going to be a big time event coming our way in the not too distant future when the BOJ cuts rates. It's not going to happen tonight, though, I don't think. So be on your toes if you're trading the yen. This right here was a trade that we had outlined yesterday. I had this area dialed in, this 38%, which was our weekly. I believe it was a weekly 38%. Really rock solid Fibonacci retracement sequence. That 38% got taken out. But if you want to go down to, say, a 30-minute chart, you'll see we took that initial pressure right after we got off the air yesterday. Really rallied up to about that. Let's see. Was that it? No, this is it right here. This high right here, Thursday. Well, we were right up there. In any case, went up, had a nice big, I got the wrong level. All right, let's go. Got it right here. Outlined, it's highlighted, my fault. In any case, right there, you got the big sell-off, all the chaos from the Fed, and then that was a pretty good trade. Your high was up to around 140.71. I was talking about maybe getting in at 40. You could have went at 50, that range right there. You had a nice little sustained sell-off right down there for the next 2 hours. Your low was about 141.87, so this came off, about 63 pips. It did take some initial heat. That was right after the Fed. It was right toward the close of the U.S. I remember watching that trade going, not going so good. Since then, we really have broken high and closing in on that 62%. So my next sell on this pair would be right up around 144.25. I think that's a pretty darn good area. If you want to sell that yen tonight at 144 and a quarter, I think you could get it. But the volatility here is definitely big. And when the BOJ gets involved tonight, you're going to see a lot going on here with the U.S. dollar, Japanese yen. So do I want to be long or short right now? I'm neutral. I wouldn't be taking a short just because we are above that weekly level. If, in fact, you want to stick with that same Fibonacci sequence, which I would recommend, it's a pretty good one, 144.29, 144.30, I'd be looking to sell probably 25s, somewhere right up just in front of that 62%. Pretty good stuff. I would be watching that closely. The other yen pair that I would be looking at, Great Britain pound, Japanese yen. This is a big one, the guppy. Pretty much everybody trades the guppy. You could look at lots going on. It's been just a 2-year uptrend. The Great Britain pound has done very well against the Japanese yen, as has everything. But right now, the last 2 months, sort of what I would say, a major turnaround. So we look at this Fibonacci retracement sequence. You can see we've got the compression right around 38%. I'm going to go ahead and throw that away right there. I'm going to throw it away. And then the other thing we're going to do is we're going to get away from all this stuff. And we're just going to look at price action on a monthly. A couple of things stick out to me just by looking at the price action. Number one, you have a hammer formation. I love hammers. What does a hammer signify? A hammer shows us we had a big-time directional move, and then we had an opposing directional move and a close. That really is an exhaustion signal. I love hammers, one of my favorites. Now, I like 1-minute hammers when I'm trading, but that's okay. Monthly hammers are great too. So we look at this big sell-off. We've got 2 months, really some serious pressure down here, right around 180. Then we got the big bounce back and a close. Negative close, still a hammer formation. What happened this month so far? Last month's high was up there at 193.26. This month's high is up there at 193.49. That's a failed auction. We tested that zone. We sold off. This looks to me like this market's basing out and ready to rally a little bit. Now, we just saw the Great Britain pound hold interest rates at 5%. More than likely, we're going to see the BOJ hold rates at 0.25%. I love the fundamentals on getting long. Now, the real question is how can I get long? Well, that's going to be tricky. I could buy it right now and just use this hammer as my stop out point. Who can afford to do that, though? What's your low? Your low on that hammer is 180. Can I really buy 189, 84s? No. Can I risk 1,000 pips on this trade? If I did that, where would I need this thing to go to? If I risked 1,000 pips on my stop loss, it's got to go to at least 200. Can it do that? Oh yeah. Could it get up to 210? Yeah. 220? Yeah. The problem with that is I'm going to have to hold it for a long time, and my swap fees may in fact kill me. I don't know what they are. You'd have to look into it, but just the cost of holding that could really hurt me. Now, it might help me too. It just depends on what exactly the fees are, but if I do look at a trade like this, I'd say, okay, am I in a good position to bid? I would say, yeah, you are. Can we find better trade location? We're going to have to turn some rocks over. Weekly's no help. Weekly shows us that big downtrend and then really shows us that hammer. What do we have right there on that weekly low? Yeah, another hammer. That's another reversal signal. Interesting. The plot thickens. So do I want to buy right here on this big bullish week? Not at market, I don't. Let's go ahead and see if we can find some way where we can get long. Look at, we got no indicators or anything. I can turn my ADR off too as well. Don't even need that up there. Got a pretty good little 4-day run. Why? Because the fundamentals have shifted. Great Britain pound now, we're holding rates firm at 5%. That's bullish for the pound. Something like that on the BOJ would be fantastic. 187.85. Something like that's about, still 200 pips away. Do we want to get even more? Even more aggressive? Could. 4-hour chart. Spike low, spike high. Went right to 62%. This area is more doable. This 4-hour chart's cheaper. Does it mean as much as the others? No, it doesn't. It doesn't mean as much. So I have to tell you that if I'm trading this guppy and I'm watching tonight's BOJ, I'd love to buy down in here somewhere. Do we get that chance? Probably not. Is it too late to buy? No, but it could definitely be costly if we buy at market here and we don't see the follow through on tonight's economic event. So I would trade this thing with caution, but this is one of those that I would have targeted if we do get a good opportunity to bid down near this dip. It would be really tough to pass on, say, like 183.50s or 184s, just because there's so much room to the top side here. So something to think about there if you're trading the guppy. All right, guys, let's go back and take a look at our market call here. We're down a few bucks. That shouldn't surprise anybody. Buying at market, typically you go for a ride. There's no two ways about it. Not my kind of trading. We could easily see this fall down into here on this 4-hour time frame. You may be able to get long. I think 132.50 is a much better entry. And we recapped all that. But if you want to get long, get long. We could even do the same type of thing here. We could just go trade and just go ahead and send them long. I don't know, how many units do we want to put on? Let's put a bunch of zeros there. What is that, 10? About $1 million. Let's go ahead and buy market and see exactly what the damage is. Okay, that's a big position. We'll go ahead and let that run and just sort of check in on these tomorrow. I think you're in a pretty good position for the Great Britain pound. Don't do that, though. Don't mirror that trade. I'm using demo funds. Don't use your real money or your challenge funds to do that. From a fundamental standpoint, I think long's the correct way to be right now. But remember, if you're going to be a fundamental trader, you got to have some deep pockets, because your true stop out point right here is going to need to be down beneath that monthly hammer. That's like 1,000 pips. Who can trade that way? Very, very few of us. Soros can. Buffett can. Who else was a big one? I don't know. Names escape me. All right, everybody. I want to thank you for joining me today. Bank of Japan's the big one tonight. Keep an eye on the Nikkei. If you're trading Nikkei futures, keep an eye on the Nikkei. Keep an eye on the Japanese yen. A lot going on. We'll be back tomorrow. With Let's Finish the Fed Week Strong. We're going to have a recap on some of these things that we put out there today. I'm still sort of waiting to see the U.S. equities indices and how exactly they react. This is an epic up day for the U.S. equities, and a lot of it's on the back of dollar weakness, rate cut mania, yada, yada, yada. So we'll see exactly how things pan out. I didn't get into equities much because we are at all-time highs, and there's really no way around that. Do we want to buy? Yeah, we want to buy, but we've got to get a pullback first. Perhaps we'll get a pullback during the overnight. Friday is going to be pullback in equities day for me. I fully expect to see some profit taking and maybe give us some opportunities to get in there and get long with good trade location. Martin and Luke Rob, thank you. Thank you, everybody, for watching. If you have any questions, be sure to reach out to me on the private messaging. If you're watching on YouTube, Facebook, X, head on over to How to Trade. Send me a private message. I'll be sure to get in touch with you. Check out our service suite. Check out our academy. And check out our live streams. All right, Connor's up in T-minus, 8 hours, 9 hours from now? A little bit longer than that. How many hours? 15 hours, 22 minutes. Connor, the powerful Connor Woods will be in the office, so be sure to check out his live streams as well. That's it. All right, everybody, trade the action well, and we'll talk soon. See you.